Here's the secret sauce. Do you know what? I've never asked anybody for money. In addition to that, I've never pitched a deal. And people say, Jay, how do you have 47 private lenders funding your deals and you never asked for money and you never pitched a deal? Well, here's the secret sauce.
If you're a real estate investor and are wondering how to raise and leverage private money to make more profit on every deal, then you're in the right place. On Raising Private Money, we'll speak with new and seasoned investors to dissect their deals and extract the best tips and strategies to help you get the money, because the money comes first. Now here's your host, Jay Conner.
What is up, all you real estate loving individuals? This is episode number 34 of the Real Estate Take podcast, and I'm your host, Wendell Butler. This is your go-to podcast for tons of information regarding the current real estate market, where we get various real estate professionals' current take on different areas of real estate. For today's guest, we have Jay Conner. Jay Conner began investing in real estate in 2003. At the start of his career, he relied on his local banker and was able to put together a few deals. However, that also meant coming up with large down payments, paying origination fees, and signing personal guarantees on every single deal. After years of feeling owned by the bank and being stressed out, he learned how to buy properties using creative financing, including subject to and using lease options. After the market crash in 2008, his banker cut him off. Jay had to abandon everything he knew about how to finance his deals. Then he heard about the world of private money. He developed his own system for gathering millions of dollars for real estate deals. And over several years, Jay refined his systems until it was repeatable and dependable. When he put it to the test, the first person he approached gave him $250,000 in private money. In a short few months, Jay raised $2.15 million in private money. Despite initially cursing his banker, Jay now thanks him. Jay's unique system allows him to enjoy seven-figure profits year after year, and he also has the freedom to work less than 10 hours per week in his real estate investing business by leveraging the power of automation and systems. So let's bring in Jay. Jay, how you doing?
Wendell, I'm doing fantastic, and thank you so much for inviting me to come along and talk about my favorite subject, that being private money. I'm so passionate about private money because this strategy alone has made more of an impact on our real estate investing business than any other thing I've done ever since 2003.
Absolutely. Yeah. And it's funny because people get into real estate investing to get away usually from their 9 to 5. They don't want to have a boss. They want to work for themselves. But if you never get into creative investing or financing or raising capital and things like that, you end up almost being, like you said in the bio, you're owned by the bank and the bank's your boss, right? So
exactly.
You got to figure different ways out, and you have a ton of experience on it, and I can't wait to dive into it. But just to start, I know we read your bio and stuff, but I always like to ask this question up front. It's just, who are you? What got you into real estate investing first off? And other than what we read about in your bio, what's your backstory? Who are you, and what do you like doing? And you can just talk about yourself a little bit.
Sure. Well, I'm probably qualified to talk about who Jay Conner is and why it is I'm qualified to talk about private money. Well, how did I get into real estate? Well, Wendell, I was actually born into the mobile home business, manufactured homes. People used to call them trailers and wobbly boxes. And my father, Wallace Conner, he's 91 and a half years old right now, and he's developing and building 350 new homes at 91 and a half years old. I want to be like him when I grow up. But anyway, my dad at one time had the largest mobile home retailing company in the nation, Conner Corporation, Conner Homes. And so I grew up around my dad, seeing how he and the company helped people own affordable housing. Mm-hmm. Well, in the early 2000s, all the consumer financing for that product went away. The industry fell out of favor with Wall Street. And if you don't have financing for that kind of product, then no more sales. Well, I knew, Wendell, if I ever got out of mobile homes and manufactured housing, I wanted to get into single family houses and investing in single family houses. Well, why is that? Well, it goes all the way back to 1993, 10 years before I actually started investing in single family houses, which, by the way, I do right here in Eastern North Carolina. My wife, Carol Joy, and I live in Morehead City, North Carolina, right here at Atlantic Beach. Small area. Our total target market's only 40,000 people, but we do 2 to 3 deals a month. Average profits now are $86,000 per deal that we do. I don't share that to brag. I share that to make a point. And that is, there's a big case to be made to be a big fish in a small pond and dominate your market instead of competing in the big cities. Nonetheless, all the way back in 1993, 10 years before I started doing this business, good friends of ours live in New Bern, North Carolina, and they wanted to build a new home. Well, they didn't have the money to do it. And so their names are Craig and Kim, good friends of ours. Well, Kim's dad lived down in Florida at the time, and he was a full-time real estate investor. And he said, I'll tell you what, I'll come up to New Bern. He said, I'll buy a fixer-upper, and you all can do the sweat equity on the nights and weekends, and we'll sell it and flip it, and you can keep the profit to be the seed money for your new home. Well, they pocketed $30,000 in 90 days on that one house. And I'm going, wait a minute. Here I am back in that day, busting my butt trying to make $3,000 on a single wide mobile home, and they made $30,000 on this one flip. And I'm going, I like the sound of that better. So the opportunity, Wendell, came along in 2003, and that's when I started. And from 2003 until January of 2009, my first 6 years in the business, Wendell, the only thing I knew to do to get my deals funded was go to the local bank or go to the mortgage company, get on my hands and knees and say, please fund my deal, and fill out applications. And the banker made me pull up my skirt and look at my personal assets and pull my credit score and all that stuff. Well, that worked okay. From 2003 until January of 2009. And then, Wendell, everything changed. I mean, the total trajectory of my business changed in January of 2009. And here's what happened. I called up my banker. His name was Steve. I called him up, and Steve had funded a lot of deals for me those first 6 years. And I called up Steve in January of 2009. I told him about 2 houses that I had under contract to purchase here in the local area. I thought I still had a line of credit at the bank prior to me making this phone call. So I called him up. We had a little chit chat. I told Steve about these 2 deals, and I learned like that over the telephone that my line of credit had been closed. With no notice to me. I said, Steve, what in the world are you telling me that I've lost my line of credit? I've always made my payments on time. I got a great credit score. And Steve said, Jay, don't you know there's a global financial crisis going on right now? I said, no, but you just gave me a financial crisis. I don't have a way to fund these 2 deals that I got under contract. And Steve said, sorry, the bank's not loaning money out to real estate investors. So I hung up the phone. Wendell, I want to share with you and your audience a very powerful question that I asked myself sitting right here at this very desk right after I got cut off from the bank. And you know, the power is in asking the right questions. And by the way, the answer to this question will help anybody fix any problem they've got going on. I don't care if it's health, financial, career, relationships, it doesn't matter. By the way, Wendell, these people run around saying every problem's an opportunity. I want to throw up. I didn't have an opportunity, for goodness sakes. Let's face the facts. I had a problem, right? Yeah. Now, that problem over time became an opportunity. If it wasn't for that problem, you and I wouldn't be on your show today, right? Talking about private money. So anyway, here's the question I asked myself right after getting cut off from the bank. I sat here and I said, Jay, who do you know? You know, it's who, not how. I said, who do you know that can help fix your problem? And when I asked myself that question, I immediately thought of a good friend who was living in Greensboro, North Carolina at the time. His name is Jeff Blankenship. Now, Jeff and I and my wife, Carol Joy, and his wife, we're all great friends. And we know each other from gospel singing events and a cappella singing events. And anyway, at that time, time, in January of 2009, Jeff was investing in single-family houses in Greensboro, North Carolina. So I called him up and I told Jeff about my conversation that I just had with my banker and getting cut off at the bank. Jeff said, well, welcome to the club. I said, Jeff, I'm not sure I want to be a member of that club, but what club are you talking about? He said, well, that's the club of having your line of credit shut down at the bank. He said, my bank shut me down last week. I said, well, how are you going to fund your single family house deals? He said, well, have you ever heard of private money? I said, nope, never heard of private money. He said, have you ever heard of how individuals, ordinary people, can use their retirement funds and move it over to a self-directed IRA company and then loan it to us real estate investors, and the interest we pay them is either tax deferred or tax free to them? I said, Jeff, I don't have a clue what in the world you're talking about. I said, what is private money? He said, well, I'm not really sure. He said, but there's this fellow down in Jacksonville, Florida, by the name of Ron LeGrand, and Ron says that he can teach us about private money. I said, well, what is it? Jeff says, I don't know, but Ron says we can get a lot of it really, really fast. I said, okay. So that was my first seminar that I went to with Jeff. I went to Ron's seminar to learn about private money, and oh boy, did I learn about private money. One of the first big things that I learned, Wendell, is that private money is the exact opposite way to get funding than getting it from a bank or a mortgage lender or a hard money lender. By the way, private money is not hard money. Hard money is institutional money that a broker has gone out and raised money to then loan out to us real estate investors. But private money is when you're doing business with an ordinary individual that's either loaning you money on your real estate deals from their investment capital and or their retirement funds. So what I learned is that the big difference between using private money and going and applying for a mortgage is that you're not applying when you're using private money. There's no applications. Your credit score's got nothing to do with how much money you get. Instead of asking for a mortgage, you're offering a mortgage. So you see, in this world of private money, we are our own underwriter. We make the rules. We make the rules. We set the terms. So when I came back, here's what I did, Wendell. I put together my opportunity. I put together what I was going to offer ordinary people that could use either investment capital or retirement funds to fund my deals. So I decided, what interest rate am I going to pay them? 8%. I've been paying my private lenders. I got 47 private lenders today, and I've been paying them 8% ever since 2009, and they love it. Yep. No origination fees, no points. And so I'm going to pay them 8%. And I put together, how am I going to protect them? I'm going to give them a deed of trust here in North Carolina. Most people call it a mortgage, so I'm not going to borrow unsecured money. So I put together this program that I would teach people. So you know what I did, Wendell? I put on my teacher hat, which says Private Money Teacher. So what did I do? I just went about getting in contact with my own personal contacts, people I go to church with, people in my cell phone, etc. And I just started sharing with them my opportunity as to how they could earn high rates of return safely and securely. Now, here's the secret sauce, and then I'm going to turn it back to you, Wendell. Here's the secret sauce. Do you know what? I've never asked anybody for money. In addition to that, I've never pitched a deal. And people say, Jay, how do you have 47 private lenders funding your deals and you never asked for money and you never pitched a deal? Well, here's the secret sauce. Separate the conversation. This is a writer downer. Separate the conversation with a new potential private lender as to the opportunity and then having a deal for them to fund. Here's a writer downer. Desperation has a smell to it. Desperation. I mean, the worst time in the world, Wendell, to be raising money is when you need it for a deal. Hey, Wendell, I'm going to take a little risk here. I'm going to go out on a limb. I don't know if you're going to agree with me or not, but we'll find out. Let me ask you a question. Have you ever heard the guru stand on stage teaching real estate investing and they say something like this? Oh, just get the deal under contract. The money will show up.
Oh, yeah.
You heard that?
Yeah.
Yeah. Yeah. Or they'll say money finds good deals, right? Let me tell you something. That's the most stupid thing I ever heard in my life. What's the money going to do? Like rain out of clouds or something, right? I mean, think about how much more confident and how many more offers you will make on deals if you got the money burning a hole in your pocket ready to go. And so I practice and I preach, get the money lined up first. So that's what I did. I put my opportunity together. I went about just teaching people the opportunity. And then when I've got someone that has pledged money to me, they like the program, they want to invest, I'm going to share with you and your audience right now, Wendell, how I get my deals funded without ever asking for money. I'm going to share the exact script right now, how to get your deal funded. So the best way I can teach this is to do a little hypothetical role play here, Wendell. So let me do the setup. Wendell, let's say you and I have known each other for a while and we like each other. We know each other. We trust each other. Maybe we go to church together or whatever. So we already have a relationship. Let's also assume that I have shared this opportunity with you as to how you can earn high rates of return safely and securely as a private lender. And you like the program. You like the 8%, all that kind of stuff. And then let's also assume that you had $150,000 in a 401k retirement plan at a previous employer that you no longer work with, and you're sick and tired of the volatility of the stock market. And I've introduced you to the self-directed IRA company that I recommend. And let's assume that you've moved that $150,000 over to the self-directed IRA company that I recommended. And now you're waiting for me to call you up with what I call the good news phone call. The good news phone call. So here's the way it goes. This is the exact script. I call you up. You're one of my new private lenders. We have a little chit chat. And then here's exactly what I say. I say, Wendell, I've got great news for you. I can now put your money to work. I've got a house under contract in Newport, North Carolina with an after repaired value of $200,000. Now the funding required matches up to what you've got in your retirement account. $150,000 is the funding for this deal. Now, closing is going to be next Friday, so I'll need for you to have your funds wired to my real estate attorney's trust account by next Thursday. I'm going to have my attorney email you the wiring instructions. That's the end of the conversation. The most stupid thing I could say is, do you want to fund the deal? Of course you want to fund the deal. And here are 3 big reasons why Wendell wants to fund my deal. Number 1, in this example, Wendell trusted me to move his money over to the self-directed IRA company. He loved the program. He's moved his money over. So that's the number 1 reason, was he trusted me. He moved his money over. The second reason Wendell is ecstatic to fund my deal is because Wendell knows I'm not going to bring a deal for him to fund unless it matches the criteria of the program I already taught him. Wendell already knows that I'm not going to borrow more than 75% of the after repaired value. I didn't say 75% of the purchase price. Big difference. It's for that reason I always bring home a big check when I buy using private money without taking any of my own money to the closing table. I mean, who wants to get paid to buy houses, right? No. So the second reason Wendell wants to fund my deal is because he knows I'm not going to bring a deal for him to fund that doesn't match the criteria of what I've already taught him. And the third big reason Wendell wants to fund my deal is because he's not making any money. His money he's moved over in the self-directed IRA company is sitting there not earning any money until I put his money to work. So I'm ethically bound to invest Wendell's money because he's sitting over there not earning any money yet. So let's unpack quickly here what I just shared. Separating conversations, teaching, leading with a servant's heart. You know, here's what's interesting, Wendell. Of my 47 private lenders, not one of them ever heard of private money or private lending until I told them about it. And not one of them ever heard of self-directed IRAs until I told them about it. And so we teach, expose them to the opportunity. They tell us how much money they got to work with. And then we call them up with the good news phone call. No begging, no chasing, no pleading, no selling. It's all about serving.
That's amazing, basically, because a lot of people, like you said, they always talk about, like all the gurus say on social media, right? It's just about getting the deal that the money will come. But your spin on it is a lot more, I wouldn't say it's conservative, but it's a lot more practical because your approach is to get the money lined up first, educate people on how they can be flexible with their money and make more, like higher returns from the traditional like stock market or IRA or 401k, and then show them a little bit of opportunities that you have worked with to show that it's there. And all you got to do is make that money available to then get the good news call, then move that money into that. And all of a sudden you're making more than you would have in the 401k. I love that because everybody talks about get the deal locked up, which what happens with that mentality, especially if you're a new investor, is you get stuff locked up where it doesn't really work because you're just trying to get deals locked up and try to get money to come, right? And then you get money to come and then all of a sudden the deal doesn't work and then everybody loses because you were so desperate to get a deal and then get money lined up that you put yourself in a bad spot. But the opposite way that you kind of approach it, I like a lot because that's kind of how I approach it, is you get the opportunities obviously on the contract using very conservative underwriting like you do, like 75% loan to ARV. That's basically what I use too. And it gives you a huge wide range to make a lot of profit and not make many mistakes with that project, especially when you have a lot of track record and experience. And then you can go out to your private investors that you already taught and told about, and then they're ready to give you money and you don't smell desperate, right? Like, I need money, posting this everywhere, posting it to everybody, giving people a call like, hey, I need out this deal, I need money. Like, that smells like desperation. And nobody wants to give money because they're like, is it even a good deal? Like, what's going on here? Like, tell me more about the deal. And you have to like pitch the deal. You have to like over exaggerate how good the deal is. And then it just gets gross because then you're a salesman, right? You want to set it up the most practical way that it's not salesy. It's more just helping each other win. It's a win-win situation, right? And the way that you approach it might take a little bit longer because you have to like get people on the same page. You have to teach them how to use a self-directed IRA. You have to set them up. You have to get them to trust you. But that's a better way to approach it because you build such a better base of your business that now you have 47 private investors that are just waiting for deals to come. And instead of you having a money issue, now you're like, I have a deal issue, which is fun because it's like, hey, I got to get deals, right? And that's when it gets really fun. So I love their approach to that. And yeah, it's like a follow-up question I have is before you set up your program that way or the way that you raise private capital, like, did you do it the other way before? And like, did you learn the hard way or did you immediately start that way? And why did you start that way? Was that how you learned from like a seminar, or did you learn it from another person, or did you just practical thinking? You're like, this is how I would want to be approached.
It just seems so much like common sense to me. Like, those first 6 years, I had a line of credit at the bank. And by the way, it was an unsecured line of credit. This was prior to me even knowing anything about private money. And so I was already accustomed for my first 6 years. I knew where the money was coming from, right? So it just seemed common sense to me when I lost the line of credit at the bank. Well, I need to have another pool of money lined up, ready to go, like I did for 6 years. But instead of institutional money, it's going to be private money from individuals. And by the way, all these individuals are just plain old ordinary people. I mean, I've got retired school teachers. I've got retired law enforcement officers. I've got retired from the Marine Corps. And then I've got people that are still working that are just using their investment capital. I've even had 2 minor children under the age of 18 years old as private lenders because they inherited money from their grandparents and their parents were looking for a good return on their children's money. So these are just ordinary people. But yes, in answer to your question, common sense told me I don't want to go get a deal under contract if I don't have a clue where the money's coming from. I mean, talking about a stressful situation. Thank goodness I never was trained to go get deals under contract and not know where the funding was going to come from. It just seems sort of stupid to me. And by the way, it doesn't take long to get it lined up. I had my very first $500,000 in private money I got within 1 week. And you know what? I got that $500,000 pledged to me to use without asking for money. The best way I can share that is with a short story, if I may, Wendell.
Yeah.
So here's how I got my first $500,000. So I came back, I got my program put together, and here's my first $500,000 private money story. It was on a Wednesday night at 7:30 p.m. Now, Carol Joy, my wife, and I, for years, we've been very active members at the Church of Christ on Barber Road in Morehead City. And so we've been going to Bible study on Wednesday night for years and years and years. So I'm going to Bible study just like I normally do on a Wednesday night. And I walk in the foyer. Now, I was looking for a gentleman named Wayne. Now, Wayne and I, we had known each other for some time. And I knew I wanted to visit with Wayne, and I wanted to offer this opportunity to him. Well, I want to share with you exactly what happened and exactly what I said to Wayne and how I got $500,000 pledged to me without asking for any money. So I walked in the foyer. I saw Wayne. I walked over to him, and I said, Wayne, I said, if you've got a few minutes after Bible study tonight, I'd like to visit with you about something confidentially. He said, well, sure, Brother Jay. So we had Bible study. We get together afterwards. We went down to the nursery and shut the door. And Wendell, here's exactly what I said to Wayne. I said, Wayne, I need your help. Woo, there's a powerful phrase right there now. Mm-hmm. I need your help. I said, Wayne, you know everybody in this town. And he did. He was the original Zenith television dealer and salesman in Morehead City, North Carolina. Now, if you don't know who the Zenith television dealer was, that means you're too young to remember life before Walmart came to town. That's where you got your TVs back in the 1960s and the 1970s. You went to the Zenith dealer. He sold it to you. He financed it. He'd actually come out to your house and repair it. That's before you just threw them in the trash when they didn't work anymore and go buy a new one. So anyway, Wayne had put a TV practically in everybody's home here in Morehead City. So I knew he knew everybody. And I told him that. I said, Wayne, you know everybody in this town. He was very, very well connected with the Rotary Club. And I said, I need your help. I said, I've now opened up my real estate investing business by referral only. And I'm now paying insane high rates of returns. Wayne, what I need your help with is when you run across somebody that's complaining about losing money in the stock market or the volatility of the stock market or not making much money in the local certificates of deposit in the bank, would you refer them to me and I'll tell them about my program as to how I'm paying insane high rates of return? Well, Wayne looked at me and he says, well, now, Brother Jay, what you got going on there? And I said, well, what do you mean, Wayne? He says, well, what kind of rates of return are you paying? And I said, well, are you saying you might be interested? He said, well, I might be interested. I said, why is that? He said, well, we're only making 3% in the local bank and a certificate of deposit. That's what it was in 2009. He said, we're losing money in the stock market. What kind of rate are you paying, Jay? And I said, well, that sort of depends on the deal. I said, what sounds high to you? He said, well, we're making 3% in the local bank. He says, I don't know, maybe 5% or 6%. I said, Wayne, I can't pay you 5% or 6%, but I can pay you 8%. He said, put me down for $250,000. So that next afternoon, on Thursday afternoon, Wendell, I went to his and his wife's home. And what did I do? I went to their home. I had on my teacher hat, right? And so I went to their home to teach them fully the program, what kind of rate I'll pay, how they're protected, how they can get their money back in case of an emergency, the frequency of payments, the documentation they receive on deals. But bear in mind, I'm not talking about a deal. I'm talking about the program. I'm sharing the opportunity with no deal attached to it. And so over 2 cups of coffee, Wendell, that $250,000 from the night before became $500,000 by the end of that conversation. And so I left that meeting with them and they just told me what they had to work with, investment capital. And I told them, I'll put your money to work for you just as soon as possible. And so then within the next week, I called them up with the good news phone call that I already shared that script. And not only did they become one of our best private lenders, but boy, did they spread the word. They told all kinds of people about the program and referred a bunch of people to us. And you know, you don't have to run around town to attract and raise a lot of private money very, very quickly. My very first private lender luncheon, Wendell, I raised $969,000 at that very first private lender luncheon. What did I do? I invited 20 people to lunch that I go to church with, know about town, you know, and I had my realtor, I had my CPA, and I had my real estate attorney there as well at the luncheon. I fed them lunch. I presented my little simple PowerPoint presentation that teaches the program, teaches the opportunity. And again, almost $1 million pledged from that one luncheon. So you can really leverage your time. It takes the same amount of time to share the opportunity with 20 people as it does one person.
Yeah. No, yeah. And I think one thing to hit on here too is like, you mentioned it a few times as you've been speaking, is just like kind of the quote, the riches is in the niches, like really knowing your circle of influence and like where you live and sticking to like that area. People think like, you know, you can't do exceptionally well just focusing that small, but no, you can do even better because your circle of influence, the people that are closest to you and that really know you the best, is where the most opportunity lies and the best area that you can like work with and help out. So I love that you mentioned that you just really, you only invest in like Morehead City, right? Like that's really where you focus, is that area?
Well, it's 2 counties. So the 2 counties here in eastern North Carolina, and Morehead City, of course, is in the county where I live. So yeah. Just in these 2 counties.
Yeah. And it's like you have such it gives you such a firm understanding of that market. It's like you really understand it and you're the top specialist and an expert of that market and what you do, right? 2, it allows people to see your track record. And as you continue doing deals and doing better and just doing stuff, and they see your products and they see what you're doing and they get to meet you, they're seeing that you are successful and you're going to continue making money. And that makes them trust you more, right? That they can pledge money to you. And then 3, they can drive, like if they're just raising money from people in the area, they can always drive and just go see the property too and be like, hey, that's the property I'm funding. You know, it's so cool, right? When you get so big, it can get a little bit more problematic. Yes, there's more opportunity to like raise more capital, but it's just not as easy. There's a lot more questions, right? So I love that you really niched it down and you're just really trying to provide great returns to people like in kind of your circle of influence. And that allows you just even more flexibility, believe it or not. And that's where people need to kind of think, right? So the riches is in the niches. Like that's a quote. People say it all the time. They hear it, but it's very true, right? And you mainly focus on just single family, like fix and flips too. And can you talk a little bit about how you would have someone set up to fund your deals in the self-directed IRA and the benefits they get from it, tax advantages and stuff like that as well? Can you just talk about that a little bit? Because a lot of investors get confused about that. And the reason they don't raise private capital is because of the whole self-directed IRA thing. It confuses them. So yeah, if you could touch on that a little bit, that'd be just amazing.
Sure. So your first question was, do I focus only on single family houses? And the answer is yes, primarily. Now that triggers a great question, which is, can you use private money for any and all kinds of real estate? And the answer is yes. Mm-hmm. You can use private money for self-storage projects. You can use private money for apartment complexes. You can use private money for commercial buildings. You can use private money for mobile home parks. You can use private money for land. But here's where the difference comes in. The difference is, are you syndicating or are you borrowing what we call asset-backed debt? So let me describe what I talk about. When you syndicate, what that means is you're raising private money from investors to invest in a fund that you have established, right? You'll syndicate, you'll raise private money for a fund when you're doing a larger project, such as an apartment complex or a self-storage facility, etc. In contrast to that, everything that I do with single-family houses is called one-offs. So what in the world is a one-off? A one-off means that you got a single-family house property, and that asset, and now you have a private lender or maybe 2 or 3. You can have multiple private lenders funding the same single-family house, but you have each private lender has their own promissory note and their own deed of trust. Most states call it a mortgage. Here in North Carolina, as you know, Wendell, is a deed of trust that is the collateralizes that promissory note. So it's asset-backed debt. We're not borrowing unsecured funds. We're backing that note, collateralizing that note with a deed of trust. As a result, the Security Exchange Commission does not regulate what we do. Mm-hmm. If you're raising money for a fund, then you're going to have an SEC attorney draw up a PPM, which stands for a private placement memorandum, and you're going to establish a fund, and multiple investors invest in that fund. We're not doing that in this world here of single-family houses. It's asset-backed debt. So that answers that question. That's what I focus on, is single-family houses. But now, how do the self-directed IRAs work? So the way the self-directed IRAs work, bear in mind, it's just not retirement funds that private lenders use. It can be just liquid investment capital. Instead of putting it in a CD, they're loaning it to you. But the way the self-directed IRAs work is that if you have a potential private lender and they already have established current retirement funds that they're not happy with, maybe those retirement funds are in a 401k from a previous employer. Maybe they are with their current employer. I've got one private lender. This is funny. He retired from Fannie Mae. Can you believe? And he's a private lender. And what's even funnier than that is he never heard of private money until I told him about it. And he was for Fannie Mae, for goodness sakes. But anyway, 3 years before he retired, he wanted to become a private lender. He said, but Jay, I can't because I'm not going to retire for 3 years. I said, how do you know you can't? I said, contact your plan administrator. This is so funny. I'm telling a Fannie Mae employee how to do this. But I said, contact your plan administrator in your retirement fund and ask them, due to you being there for 27 years, can you move part of those funds out without any kind of tax consequences? And he did. He contacted, he said, yeah, I mean, due to his tenure and the length of time he had been with Fannie Mae, they allowed him to move up to 50% of his retirement funds out of that 401k. And so he did. He moved it on over to the self-directed IRA company that I recommended and started being a private lender. So how do self-directed IRA companies work? They cannot give any financial advice whatsoever. They are what's called a third-party custodian. So all they do is they house your retirement funds. There's no tax consequences when a private lender or an individual moves money over to the self-directed IRA company, no tax effect. And so then depending on the type of retirement funds they have, when they invest it or loan it to you, the real estate investor, the interest you pay them is either going to be tax deferred until they take distributions, and then it's taxed at that rate. Or if they have a Roth IRA, then the interest is tax free because a Roth IRA has got after tax money that's been invested in that fund. So it's very simple. Here's the steps as a real estate investor. And by the way, over half of my private lenders are using retirement funds to invest, to loan money to me. The takeaway on that is, unless you have a relationship established with a self-directed IRA company that you can refer people to when you're talking to a potential private lender, you're going to miss out on at least half of the potential private money to you. So number one, establish a relationship with a self-directed IRA representative, so that when you're talking with a potential private lender and you learn they're not happy with the returns they're getting, well, you can introduce them to the rep, and the rep can hold their hands on moving that money over to establish their fund. And once their account is funded, now you need to put their money to work for them just as soon as possible, because they're not making any money, right, until you actually borrow the money, because we don't pay any interest on money that we're not using. And very simple. I mean, they have this thing called the direction of investment, and your private lender will fill that out, or you'll help them fill it out. Very simple. And then they have their self-directed IRA company wire funds from their retirement account to the real estate attorney's trust account, or if you're in a state using title companies, to the title company, and then you get your deals funded that way.
Yeah, I mean, it's when you say it out loud like that, it's super simple. It's really just moving money from a 401k, which is, it's a retirement fund that you don't have any control over. It's kind of just sitting there and it's accruing whatever the stock market or whatever you have invested in within your 401k, whatever that does. That's what it's accruing interest. And then a self-directed IRA is just moving that money into a separate retirement type account that then you have the ability to move that money and invest in whatever you want, because it's self-directed. Like, you are the owner, you're the one that can push it out, you're the one that can send it to wherever, and that allows you to then invest in these real estate deals. When people invest with a self-directed IRA, and like, can they only invest as interest accruing lenders, like having like liens on houses, or can they invest and get equity from deals? Can you speak a little bit on that? Or is it capped on certain ways that you invest based on like
Right. So my private lenders do not get any equity in the deals. They don't own any of the property. My private lenders are the bank, meaning it's my LLC that owns the properties, and the private lender acts in the same capacity as a bank, right? Yep. They're the lender. I'm going to give them the same protection. They get a promissory note. They're going to get a deed of trust, securing that note. I'm going to name them on the insurance policy as a mortgagee, protects them as well, name them on the title policy as an additional insured. So I'm going to give them the same protection that the bank gets, but that's what they receive. They know exactly they're going to receive 8%. And that's not 8% for the entire year unless I'm using that money for the entire year. So it's an APR, 8% annual percentage rate. But if I'm only using the money for 6 months, they earn 4% on that particular deal. And of course, they want me to put their money back to work and reinvest their money as soon as possible.
Yep. So then it turns into you just need to find deals to make that money work. And instead of finding deals and then finding the money, which is awesome the way that you set that up. Another perk of it a lot too is like anytime they use a bank or anytime you use a hard money lender, there's a lot of closing costs, origination fees, there's all that stuff. And you're when you use a private money lender the way that you have it set up, you're bypassing like all those fees. So it's a lot cheaper, and that adds up, like, especially if you do like 50 deals a year, right? And like usually it's like, let's just say 10 grand for like additional fees of origination fees and lender costs and stuff. Like that's $500,000 that you're saving. Is that the right? Yeah.
Yes.
Yep. Yeah. $500,000. Sorry. I was sorry. Yeah. Like 500 grand you're saving.
Correct.
Right. Like, so it's super beneficial to you. It's super beneficial to the private money lenders because they're making a higher return. It's just a win-win-win situation, and it's safe because you're not just getting a promissory note, period, like that's not backed by anything. You're giving them a lien on the home that if for some God forbidden reason it doesn't go well, they can take that property and they're not left out to dry, right? It's asset backed, it's safe, and it's secure, and there's a lot of tax benefits for it too. So it's beautiful. You just have to be able to explain that to people and get them on board and understand the opportunities, right? And I think that's one of the biggest barriers that investors have nowadays because they just don't know how to explain that to people.
Well, guess what, Wendell? We can fix that because you know what? I would love to give your audience a free gift. And this free gift will fix that problem as far as them easily explaining to potential private lenders how this works. I'd love to give your audience my book, bestseller, which is called Where to Get the Money Now, subtitle, How and Where to Get Money for Real Estate Deals Without Relying on Hard Money Lenders or Traditional Lenders. I'll autograph the book. I'll mail it 3-day express in the United States Postal Service. It's $20 on Amazon, but don't spend $20. Let me give you the gift. Just cover shipping and handling. You can pick up the book at jayconner.com/book. I'm an ER, not an OR. So that's www.jayconner.com/book. And I'll rush it right out to you. I'm also going to include 2 tickets valued at $3,000, 2 tickets to my private money conference that I put on, live event 3 times a year right here in Morehead City, Atlantic Beach. And I'll include those tickets as well.
Love that. I might have to come down there and join you because my goal is actually to move closer to the East and the Carolinas as well. So I got to explore places down there, see what looks good, see what I like. That's the goal. So we can make it a business fun exploration time.
Of course. I'd love to have you down here, Wendell. In addition to that, if your audience has enjoyed listening to what we've been talking about with private money, then I invite everybody to come over and check out my podcast. I'm now in my 8th year of the show, and the name of my podcast is Raising Private Money. Imagine that. Raising Private Money with Jay Conner, and it's on all the popular platforms.
Love it. And I'm going to put all that in the bio as well of this podcast. So for those listening, you can just scroll on down and click it and check it all out. So I know you're a busy guy. I want to get this wrapped up. And I always leave with like one last question. And it's just basically leaving the floor to you, which you already kind of covered with those last 2 things you said. But is there anything else you'd like to tell the audience of how to get in contact with you? Any social media handles you have? Obviously the business meetups that you run, and just how to find or contact you if you're open to that. This is your time
absolutely.
to just talk about it.
Yeah. The easiest way to contact me is to go to jayconner.com/book. My contact information there as well. And so that's really the easiest way. I have a YouTube channel with thousands and thousands of subscribers. just search for Jay Connor Real Estate or Private Money, and that's easy to find as well.
Love that. Well, thank you so much, Jay. It's always great to talk about raising private money, especially in this market where I think it's more important than ever nowadays because everything's so expensive. And it's just great to have you kind of clarify things and make it sound so simple, which it really is. It's not that complicated. It's really just communicating, building trust, and showing people what they can actually do with their money and making sure that you set your business up correctly to help provide that returns for them. So I love that you came on, and yeah, anything you want to say before we head on out?
I'm all good, Wendell. Thank you so much for having me come on. God bless you.
Beautiful. And thank you all for listening.
Are you feeling inspired by the knowledge you gained in this episode? Then head over to jconnor.com/moneyguide. That's jconner.com/moneyguide and download your free guide that shares 7 reasons why private money will skyrocket your real estate investing business right now. Again, that's jconnor.com/moneyguide to get your free guide. We'll see you next time on Raising Private Money with Jay Connor.